Welcome, everyone. So you've given us some really interesting material this time. We're doing a deep dive into the Indian defense sector, looking closely at that Nirmal Bang Q4FY25 report.
That's right.
And our mission today really is just to pull out the most important stuff from these pages, give you a clear, concise view of, where the sector is now and maybe where it's going.
Yeah. Think of it as a shortcut.
Exactly. A shortcut to understanding what's happening in a pretty dynamic part of the economy.
In this report, it covers a lot, doesn't it? You've got the big macro trends, sector performance, specific companies.
Right. Recommendations, risks. It's all in there.
It's pretty comprehensive. We're just here to sort of break it down.
And honestly, looking through it, there were a few things that kind of jumped out at me. The sheer scale of the growth they're projecting, it's remarkable. And also how much domestic firms are dominating the contracts now really tells a story.
It does indeed. That indigenization push is very real.
So let's unpack that. Let's start with the big picture, the macro outlook, set the stage.
Okay, sounds good. So the report flags this as a period of, well, really significant expansion.
Right.
Current annual output is already over, what, 1.27 trillion?
Yeah, substantial.
But they're aiming for 3 trillion by FY29. That's quite a leap.
Huge leap. And it's not just happening by itself, is it? There's a clear government strategy.
Oh, absolutely. A very deliberate push to make India a global defense manufacturing hub.
And that ties into the Atmanirbhar initiative, right? The self-reliance focus.
Exactly. And you see the impact starkly in the contract numbers.
Tell us about those.
Well, in FY24-25, some like 92% of defense contracts went to domestic firms.
92%. Wow.
Yeah, that's 1.6 trillion out of a total 2.1 trillion across 193 contracts. It really shows that indigenization isn't just talk.
No, clearly not.
Well,
So what else is driving this? It can't just be that one initiative.
No, you're right. It's a convergence of factors. You've got rising defense budgets consistently. Then there's the geopolitical situation, which unfortunately creates demand.
Sure, a necessary capability.
And then there's this growing strategic push for exports. India wants to sell defense equipment abroad, not just make it for itself.
So multiple engines firing at once, really.
Pretty much. Creates a very fertile ground for the sector.
The report also mentions the Defense Acquisition Council, the DAC. Their approvals seem important.
Yeah, they're key. The report mentions some big ones getting the green light. Capital acquisition proposals, things like engines for T-90 tanks, missile systems.
Critical stuff.
Definitely. And other big projects, too. AEW&C aircraft, those ATG gods for Nostra torpedoes.
It feels like a really broad modernization effort.
It is, and connecting it back, these DAC approvals are crucial signals. It means the government is moving from just saying, we need this, to actually putting money down.
Right, funding the projects.
So that T-90 engine approval, for instance, that's a future order, real revenue for whichever company gets it.
Makes sense.
So the whole process creates these market opportunities. And like we said, it's not just for India's needs. They want to compete globally.
And that means investing in new tech. AI, robotics.
Exactly. You need that edge to make competitive export products.
Okay, so the macro picture is definitely tilted towards growth. Let's zoom in now on the actual numbers. How did the sector perform overall in Q4 FY25, according to these estimates?
Right, the aggregate figures. I'll give a good snapshot. The total order book is, well, it's huge. 3,535,619 million.
Wow. Okay, break that down. That's over 3.5 trillion rupees.
Yep. And importantly, it's up 42.2% year on year.
42%.
And up 4.4% just in the previous quarter. So massive growth and future work lined up. That's what a big order book means. Strong revenue visibility.
Okay, that's a huge positive. What about actual sales and profits for the quarter?
Net sales came in at 305,741 million. Now, that was actually down slightly year on year by 1.5%.
Oh, okay.
And this is key, it was up 52.8% compared to the previous quarter, Q3.
So big sequential jump.
Exactly. And you see a similar pattern with EBITDA, that's earnings before interest, taxes, depreciation, and amortization.
Right, a measure of operational profit.
It was 98,676 million. Again, down slightly year on year, 0.7%. But up a massive 96.0% quarter on quarter.
96% QOQ. That's enormous.
It really is. And the EBITDA margin improved too.
Yeah.
32.3%. That's up 24 basis points UI, but up 712 basis points QOQ.
700 basis points QOQ, so over 7 percentage points improvement in margin quarter on quarter. That sounds like better efficiency.
Definitely points towards that, better operational efficiency kicking in.
And the bottom line, net profit.
Net profit was $79,353 million. That showed overall growth up 3.3% year-on-year, and again, a very strong 91.2% jump quarter-on-quarter.
Okay. And EPS followed suit. Earnings per share.
Yep, EPS was 231. That's up 15.5% UI, and a really striking 120.4% QAQ increase.
So even if the year-on-year picture was a bit flat, that quarter-on-quarter recovery looks really strong, suggests good momentum.
That's the key takeaway from the aggregate numbers. Strong QOQ momentum, margin expansion, profit growth, all good signs.
But there's always a but, right?
Well, yes, the report adds a note of caution. Despite the positive long-term outlook, we should probably expect some short-term volatility. It's common in this industry with big, lumpy contracts.
Fair point. Important to remember. Okay, let's shift gears now to the individual companies. The report picks out a few interesting ones, right? Growth prospects, strategic moves.
It does. Let's maybe start with solar industries.
Okay, solar. What's their story?
Well, their projected growth rates, the key GRs from FY25 estimates to FY27 estimates are pretty impressive. Revenue KGR of 33%, EBITDA at 37%, and PAT, profit after tax, a really strong 46%.
Wow, 46% PAT changer. That's high. What about their order book?
Estimated at $134,600 million for Q4 FY25. And they've had some big recent wins. A $61 billion order for Panaka systems.
For rocket launchers.
That's the one. And $22 billion in export orders. Really shows their international push.
Okay, strong growth, export focus, valuation.
That's the flip side. It's high. Forward PE priced earnings ratio is estimated at 57.6 times.
Oof, pricey.
Yeah. But the analyst rating in the report is still a buy. The key risk mentioned is just execution delivering on those big orders.
Makes sense. High growth, high valuation, execution risk. Who else?
BML is an interesting contrast, maybe.
BML, okay, how so?
Their projected revenue CAGR is lower, 17%. But look at EBITDA, 38% CAGR.
Yeah.
And PAT CAGR, 52%.
52% PAT growth, even higher than solar.
Exactly. Their estimated Q4 FY25 order book is $142,464 million, slightly bigger than Solar's. They got a $4 billion Metro car order recently.
Diversification.
Right, and a big partnership with STX Engine. What's interesting is their valuation metric, EBITDA, enterprise value to EBITDA, looks relatively lower at 19.2 times.
Ah, so potentially more of a value angle here compared to solar.
Potentially, yeah. The report gives them a buy rating too. Risk, potential execution challenges, especially given their stock had a recent correction.
Okay, so solar for growth, maybe wait for a dip. BML, strong earnings growth, maybe undervalued. What about the giant Hindustan Aeronautics, HAL?
Right, HAL. Projected revenue CAGR 19%, EBITDA 31%, PAT 22%. Solid numbers.
But their order book is the real story, isn't it?
It's astronomical.
Ah.
Estimated $1,840,000 million for Q4 FY25.
1.8 trillion rupees.
Yes, just massive. Highlights their dominant position. They just got that huge $627 billion order for 156 light combat helicopters.
The LCH price chart.
That's it. Their forward PE is 28.4 times. Rating is buy.
Risk for them. Just managing that huge backlog.
That's a big part of it.
Yep.
Execution capacity is key. Also, potential government stake sales could impact the stock, but that order book, it secures revenue for years.
Clearly central to India's defense plans. Any others worth highlighting quickly? Mazagon Dock, data patterns, Paris.
Sure. Mazagon Dock shipbuilder. Projected CAGR around 25-30%. Order book $445 billion. Delivered the 6th Scorpene sub recently. Forward PE around 30. Buy rating. Risk is potential margin pressure from provisions.
Got it. Data patterns.
More growth focused. CAGR is around 20-24%.
Yeah.
Smaller order book $11 billion, but strong focus on exports and R&D. Forward PE about 42. Buy rating. Risk is cracking that export market.
And Paris defense. Seem expensive.
Yeah. Forward PE over 55. CAGR is around 25%. Buy rating, but the order book is quite small, $6.5 billion. That's a key risk highlighted, small base, high valuation.
Okay, that gives a good flavor of the different players. It's interesting that valuation spread, you mentioned BML, looking cheaper on EBITDA, Paras, and Solar, quite premium on PE.
Definitely something investors need to weigh up. And those strategic moves, like BML's partnership or Solar's export wins, seem like key things to watch.
Absolutely. So putting it all together, what are the main investment takeaways from the report? What does it mean for you, our listener?
Well, the report flags a few top picks. Solar industries for that long-term growth in order book, but maybe wait for a better price.
Right, given the valuation.
BEML is that potential value pick with strong earnings growth. Data patterns for the export and R&D angle. HAL for stability and that massive backlog. And Mazagon Dock for steady shipbuilding growth.
So a mix of strategies there. What about people who already own some defense stocks?
The suggestion seems to be hold after microwave, Farad Dynamics, BDL, Power Electronics, BL, though maybe limited upside for Astra and BL, and BDL's valuation might be a bit stretched.
So hold, but keep an eye on them.
Yeah, and consider adding on dips for BEML, data patterns, HAL, Mazagon, Paras, and Solar. Maybe even trim BDL if the valuation looks too rich.
Okay. And if you're totally new to the sector, where to start?
The advice leans towards maybe looking for corrections in the high flyers like Solar and Paras, but it specifically suggests accumulating BEML and data patterns now, given their profiles.
So BEML and data patterns as potential starting points.
Seems like it. And generally diversify. Mix large caps like HAL for stability, mid caps like BEML and data patterns for growth value balance, maybe a smaller slice for the higher growth names like Solar, understanding the risk.
The overall takeaway seems to be BEML, data patterns, HAL offering that good balance of value, growth, and stability.
That comes through pretty clearly, yes.
Okay. But it's important we talk about the other side of the coin, too. Risks and challenges. It can't all be smooth sailing.
No, definitely not. The report highlights sector-wide risks. Execution delays are a big one.
You mentioned that with HAL's huge backlog.
Exactly. Delays can mess with revenue recognition, cause volatility. Raw Dynamics is mentioned as having seen some of that.
Okay. Execution risk. What else?
Geopolitical risk, naturally. Global tensions could disrupt supply chains for critical parts.
Always a factor in defense.
And high valuations across the board. We've touched on this, but many stocks are trading high, which increases a downside risk if the market turns.
So sector-wide, execution, geopolitics, valuation. What about company-specific risks? We touched on some.
Yeah, just to recap quickly, Astra Microwave limited upside, BDL high R&D spend risk, BEL high PE, Mazagon Dock margin pressure risk, Para's small order book versus high valuation, Solar execution risk on large orders.
A good reminder that diligence on individual names is crucial.
Absolutely. And diversification helps mitigate some of these individual risks. Monitoring geopolitics is also key.
Okay, so we've covered outlook, performance, companies, recommendations, risks. Let's boil down to actionable insights. What can you, our listener, actually do with this information?
Right, practical steps. If you're already invested, maybe review your portfolio. Consider if rebalancing towards BEML or data patterns makes sense, given their apparent value and growth.
And hold the big ones.
Holding HAL and Mazagon Dock for the long term seems like a reasonable strategy based on their order books, but definitely monitor the valuations of Paras and Solar, maybe trim if they get really stretched.
Okay. And for new investors again?
Maybe start cautiously. Leaders like HAL and BEML could be initial positions.
HAL for stability, BEML for value growth?
Kinda, yeah. Maybe wait for dips in Solar and Paras if you're interested there, given their current valuations. Build a diversified portfolio over time.
And stay informed.
Crucial. Keep track of policy changes, new order wins. The overall strategy seems to be long-term focus aligned with the sector's growth, but maybe some tactical awareness of quarterly volatility.
The key message seems pretty consistent, though. Long-term opportunity with BEML, data patterns, HAL highlighted.
That sums it up well, yes. The report paints a clear picture of that strong growth path for Indian defense.
Driven by that self-reliance push, Atmanirbhar Bharat, and government support.
Definitely. And the focus for investors really seems to be finding those companies with both a solid order book and the potential for strong earnings growth.
And as we found, BEML, data patterns, and HAL seem to fit that description frequently in this report.
They do. But again, always balance that potential with a realistic look at valuations and the inherent risks, execution delays, geopolitics.
Right. So a balanced, diversified approach seems wise.
Seems like the most prudent way to navigate what is definitely a promising, but also, complex sector.
So for you, our listener, maybe the final thought is this. How might these big shifts in India's defense sector impact your own investment view? Or even just your broader understanding of India's economic and strategic direction?
Yeah, it might be worth digging deeper into some of these companies, or maybe the wider implications of that indigenization policy.
Definitely a sector with a lot happening and one worth keeping an eye on. Thanks for joining us for this deep dive.